In Lesson 1, we learned how to paper trade. A paper trade is a hypothetical trade that does not involve any monetary transactions. Paper trading is a risk-free way to learn the ropes of the market. In Lesson 2, we're going to learn how to develop a pre-trade routine to mitigate operator errors. Let me explain. All professionals develop and practice a pre-shot routine to mitigate errors. You see this in every sport. This is in fact what they practice every day. I've developed a pre-trade routine for reading charts. This video uses Bitfinex's one-day charts, where each chart is 24 hours of trading. And it's summarized as Yang the Bull, green, Yang the Bear, red. Think of this as a one-day game with one score: bullish, doji, a Japanese word meaning undecided, or bearish. That's the game. You use this routine to observe direction, volatility, strength by comparing the price to a 14-day average. Here's the routine. I think you'll find this interesting. The chart direction is the first thing that we look at, and we make a decision. Is it bullish, doji, or bearish? Then we look at the relationship of price to the center line of the Bollinger Bands. Make the same determination. Choose one. Above, doji, below. Bollinger Bands, we observe them as if they're expanding for high volatility or contracting, indicating low volatility. The price to the Bollinger Bands yields another clue. If they're touching the top band, it's called overbought. If they're touching the bottom band, the code word is oversold. Draw a trend line between the bands so that you can measure the width today to the width tomorrow. See if it's expanding or contracting. Always observe the last trend on the chart. That's the most important information on the chart. Observe its direction, and at the same time observing the direction of the last volume trend. 2 days is the shortest trend that you can observe. Finally, compare the relative strength as being strong, weak, a doji, and its position as being above or below that center line. And then you can color code these results for a richer understanding. Now here's how it works. When I look at a chart, I determine the direction. In this case, it's doji, and I measure the distance between the bands. And I summarize what I've done. When I look at the chart tomorrow, I copy my volatility line from yesterday, superimpose it on the chart, and I see I have to add a little more to it, which means the volatility increased. And summarize my observations. Price is below the center line and in fact has been oversold. The final thing I do with the Bollinger Bands is observe the short-term trend after, of course, measuring a distance between the lines. And I notice the short-term trend is bullish, but the volume is bearish. Now that's called a divergence, and that's a signal of weakness. If they were going in the same direction, that would be a signal of strength. Then the next day I notice the volatility has decreased, which means we're now in low volatility. And I look at the relative strength indicator, and it's below the center line and heading down. And the final indicator in the Bitfinex technical indicators is the parabolic SAR. It's an indicator that sets trailing price stops for long or short positions. It's more popular for setting stops than establishing direction of a trend. If a trend is up, you buy when the indicator moves below the price. If the trend is down, you sell when the indicator moves above the price. I add one more indicator. I call it the chart sentiment, where I use the open, the chart high, the chart low, and the chart close. I use color-coded trend lines. These are my colors. You can use your own. I connect the low and the high, which will become the wick. I collect the open and the close and color-code it. Green if the open is above the close, vice versa. Red if it's vice versa. Doji if they're equal. Superimpose price, and I can see the chart sentiment with a clue revealed in that candlestick. You can look up that candlestick at chartstocks.com. Go to Candlestick School for a complete listing of the different candlestick charts and the clues that they reveal. Now, putting it all together in your own words: bearish price and tenor, low volatility, the last trend is bullish, volume is doji, the RSI is weak and bearish. Don't need any trend lines. Use this process until you get it. And if you change the process, give it a new revision number and the date that you make the change, because you are your own operator. Thank you.